the 6 steps that you should take to lower your car insurance. The first way is to understand the type of policy that you have as far as the liability limits, the coverages that you have, and just do kind of an overall check or review. If you aren't working with an agent, I would recommend you either find a local agent, or I'll put a link in the description below to where you can work with an agent to have them kind of review the policy and then shop it for you. That's usually the best part, is to work with a company that's willing to put the coverages first more than the price. I get it, you clicked on the video because of the price, but you want to make sure that you're not overinsured on some scenarios. The same follows true is if you're underinsured. I recently just wrote an insurance for a doctor like a couple days ago that they had $10,000 property damage. They have millions of dollars to protect and they didn't have barely anything for coverage in our state. So in that scenario, we were able to catch that as quickly as possible. We revamped it, so now if they have an accident, they're covered for hundreds of thousands of dollars versus the $10,000 that they could have been sued for. The one thing I want to warn you too is that when you are looking at this, the number one, this actually came from an article that I was reading from the Zebra, and they said you should shop your rate every 6 months. I would burn that and throw it out the window and say goodbye to that. Who has time for that one? And if you care that much, then sure, do it every 6 months. But the reason they put that there is because they get paid when you reshop it with them. So they sell your information to another company, which isn't necessarily a horrible thing. It's just that they want you to shop as often as possible. That loses what's called the longevity discount. And that's the first thing you should think of and look at is, have you had 3 years with an insurance company? If you have, great. Most companies, the top companies, will give you a discount for longevity. If you've had 5 years with an insurance company, you'll get an even bigger discount. Honestly, it cuts off after that. I've had people come in that have had 32 years with a company. They didn't get any better of a discount than the person that's been with there for 5 years. So 5 years or more, you're going to have the best possible rate. So if you are with a company and the rate hasn't changed that much and you have a couple months left or 6 months left, it might make sense to run a quote, assuming that you've had that prior, to see what kind of a discount change you might get if you wait a little bit to switch your insurance. The second piece, and I kind of agree with the Zebra here, is they say be careful with claims. And yeah, I get it. Insurance guy telling you not to file a claim, typical. Here's the thing that they look at. When you have a claim, there's 2 types of claims. There's minor and major. Those 2 thresholds are prices that they count for. And actually in some states there's even the medical. So if someone got injured, that's actually an additional possible rate change. You've got the minor, the major, and any type of medical payout. So the medical payout obviously is going to be the worst because you've injured somebody, and that's what car insurance companies are scared of. They know what your car's worth. They know what most cars are worth in your area. So they know kind of what they're going to pay, even if you total the car. $18,000, $50,000, whatever that case is. But you carry hundreds of thousands, if not millions, to protect somebody if you injure them. In that scenario, they don't want those types of claims. So that would hurt you the most. But what would happen is if you think about the cost of a claim, because you will have a rate increase unless you end up having to find a different company because now that you've had the claim, the risk has changed for you, right? And you may be better off with X company versus A company. In that scenario, the cost of a claim, if it's under $2,000, and when I worked at Farmers Insurance, it was anything under $1,500, it wouldn't impact it as much. So you'd have a lower impact for a minor claim because it wasn't a lot of payout, and they said, we kind of half forgive it anyways. In this article, it's $2,000, but when I worked at that other company, it was $2,500. So some companies have different rules that they've gotten approved that X amount charges more, less amount charges less. Now you might be saying, I'm in a no-fault state. It doesn't matter because I fix my own car and they fix their own car, and because it wasn't my fault, it doesn't raise my rate. Well, that's half true. Most of those states have a guideline or a rule that if you have a second claim that's not at fault, they can revert back to the first claim, and now you're getting charged for those because it's impacted. Your risk has changed as far as the odds of you having another accident. So they're allowed to show that there's proof or at least some sort of reason that they would have a larger increase for your premium. Love it or hate it, that's honestly what the numbers are. And I kind of agree with this article. It's kind of cool to see, but the average cost of a claim, if you had 1 year with the claim and the claim exceeded $2,000, they're saying your rate increase would be about $700-ish plus for the first year. It would actually increase about $1,500 for the second year, and you'll have a total paid back about $2,300. So if you really think about it, if you had a $1,000 claim and let's say a $500 deductible, you're going to get $500 back. But over the course of the next 3 years, you end up paying $2,300 back. it raises the question, is it even worth it? The third way to lower your car insurance is to look at the deductibles that you carry. If you are carrying a lower deductible and you can't afford more out pocket and you want to just, let's say, save some of the money away. So if you have a $200, $250, a $500 deductible, it can lower your price roughly $200 every year if you do a $1,000 deductible. That's kind of the average that you'll see across the board. Now, keep in mind, if you have an accident, now you've got an additional $500 or whatever the cost is more to come out of pocket. So make sure that you have the funds available, that it's worth it. If it's something that you couldn't afford, then keep the lower deductible and pay a little bit more per month. It makes sense just in case something were to happen. The fourth way is to bundle your home and auto. If you're not working with the same company as your home and the same company for your auto, you could be missing out on a ton of discounts. Because of the rate increases, I have seen that it has been changing a little bit to where the home and auto doesn't always make the price less expensive. And the reason being is because maybe they had a rate increase on the home, but not a rate increase on the auto with company A. And company B might have had the opposite. So sometimes company A and company B are better separate. But honestly, I would say 70% of the time, they're more powerful and less expensive if you were to combine those all. If you don't own a home, that's the same as renter's insurance. At least in the majority of states that we work in and sell insurance in, they actually have the same rating as if you were a renter versus if you were a homeowner. So spending $15 to $20 for renter's insurance to save $50 on your car insurance makes sense. By the way, if you are shopping for car insurance, I'll put a link in the description below where either my agency or several people that we work with can help you out as far as doing that shopping. We work with multiple companies, so it's a lot easier to take the coverages that you're looking for and try to match them up with the companies that have the best rates. Apart from that, the fifth point, 1, 2, 3, 4, 5, number 5, 6, 7, whatever number we're at, the biggest thing is to look at the discounts. Although we didn't necessarily go over the discounts, there's like 10 or 15 different discounts. I'll actually link a video at the end that goes over them, but let's talk about some of the major ones that you would want to think of. The most popular and the number one controversial one is doing telematics. If you are willing to give up your data for 90 days with some companies, other companies, I don't recommend it if they make you do it forever because now you constantly have to show proof. But if you're willing to show your driving history, that you don't brake hard, you don't accelerate fast, you don't drive between 12 and 5 a.m., and you don't touch your phone while you're driving with some companies. So if you know that those are the scenarios that you can show proof of for 90 days, it might make sense to do the telematics. I think the average telematics saves between 12 to 18%. Most of the people that I've worked with have been closer to the 20%, but it just depends if it's a fit for you and you're willing to share that data with an insurance company. The second major discount is if you're a homeowner. You don't have to bundle to be considered a homeowner. If you are a homeowner in some states, they've kind of started to outlaw it in other states because it really hasn't been proven to be fair, but there are still some states that give homeowners a better deal. The second major one is something that you can't change today. It's you just being a good driver. If you are a good driver, you haven't had claims that were your fault in the past 3 to 5 years, you likely already are getting the discount. Most companies will automatically just trigger that and put it on your policy. But if not, talk to your agent and find out if that's a discount that you do have applied. Those are very large pieces with most insurance companies, and they will give you probably the best deal as far as going with the new rates. The next one is kind of a combo, is multi-car and multi-driver. So if you're in a home with other family members and you are okay and comfortable sharing the risk, keep in mind, the liability has to be the same for everybody. The car insurance, like all of the pieces that you do, you're tying yourself with people. If it's just you on a policy and someone else in the home on a policy, when you combine those together, there's the multi-car discount, which is actually a fairly good discount. There's also the multi-driver. Now, the multi-driver isn't a listed discount, but what it does is it splits the risk, because even if you have one car and 2 drivers, having that second driver pulls some of that liability risk away. And then adding the second car, sure, it adds more to the policy, but it's less expensive than if they were on their own. No, you cannot do it if you don't live with the person, because you have to have the one household. Those are the major ways that you can lower the rate on your car insurance. If you are interested in the future videos, definitely subscribe, turn the bell icon on. I am working on some of the rate changes that we're seeing with companies just to notify you of things that are coming due soon. That way, if you are with a company that is having a rate increase, or if you're shopping and you see them, you may want to think twice of joining them because the next renewal might be more than what you left in the first place. If you want to know more about the discounts, more specific details, and more of the little ones and the mid-sized discounts that you can get, I'm going to put a video right here that you can check out. If you're new to car insurance and you're just looking for some advice and don't know what coverages to carry, check out my Insurance 101 for cars. I'm Mark with Think Insurance. I'll see you in the next one.